Welcome to Fuller Speed Ahead. I'm Craig Fuller here with Kelvin Beachum, an offensive tackle for the Arizona Cardinals and also a big investor in early stage technology companies. Kelvin, how are you today?
I'm doing well, Craig, man. So great to see you again. Great to spend some more quality time with you. So excited about this opportunity.
Yeah, likewise. Last time we were together was right when COVID, I think it was actually pre-COVID days. You were in Morristown, New Jersey. We had lunch there, and you were headed out to Arizona that evening. How is the adjustment going from New Jersey to Arizona been for you?
First and foremost, the weather is a lot better uh, on this side of the country. In Jersey right now, it's snowstorms that are continuing to, you know, hit the Northeast, and out here it's the mid 70s and clear skies. So Arizona has been good to me. It's been a place that, I've been here for a couple of years, and it's just nice to actually be here a little longer than just the off season.
So Calvin, you've been invested in FreightWaves for a couple of years. You were one of our earliest investors. But one of the things that was striking when you and I first met is how you approach early stage technology investing. That's different than what most folks that are in professional athletics do. Can you talk a little bit about your strategy?
For one, when you think about founders, think about markets, you think about what investors are striving for. They're striving for differentiation, they're striving for the edge, or they're striving for their competitive advantage. And for me, I felt the competitive advantage was to be contrarian to what most athletes love to look at, love to invest in. Most athletes love to do media, love to do sports tech, um, hair and beauty. Those things are fine, but for me, I wanted to be different. And I have, a couple of those companies within my portfolio, especially early in my journey. But I found that it was better to be contrarian and find markets and industries where we're not in, and where we can't add value, and where we do have, I wouldn't say expertise, but we have a different frame of mind, and we have a different uh, perspective that we can bring to the table. And I would say, as I've continued to spend more time in the earlier stages, it's that perspective that founders from different, categories and different industries enjoy. And I think that's what, drew me to FreightWaves, and what's drew me to some other companies within the transportation industry is the fact that it's a very archaic industry to some senses, but there are also ways in which those categories are being redefined. And as a young person, being young, how can I be a part of the revolution that's happening in some of these archaic industries?
Okay, well, what do you look for when you back a founder? What type of companies what is it about a company that really gets you excited?
First and foremost is the relationship with the founder. That is the number one thing that I'm most concerned about, that I'm most um, aware of, because if that relationship with the founder isn't there, it doesn't matter what the money does. Like, it's about, yes, it's about returns, but at the end of the day, you still want to have social capital that's invested in the relationship. So that's the first thing I look for. The second thing I look for is culture. What is the culture that is being built by this particular entity? And I was fascinated by the culture that FreightWaves was building. And then thirdly, you start to get into what is their differentiation as a company, the category that they're going after, the industry that they're going after. What's their differentiation, and how do they separate themselves from the market? How do they create barriers to entry? How do they build a moat around their company? If they're all about taking on market share, how do they take on market share? As they think about acquiring customers, how are they thinking about acquiring customers? What's the long term value of the customers that they're trying to acquire? And really starting to dive into what makes this company tick. And for me, those three concepts are kind of where I started, just in the infancy stages of being able to develop a rapport and a relationship with the founder and with the companies that I'm wanting to back.
Kelvin, you spent some time in Silicon Valley actually working for some VCs. Talk a little bit about how what you learned there, what you experienced there, you're applying into some of the startups that you're investing in.
Yeah. A couple years ago was privileged to go out and spend a significant amount of time with the prominent venture capital firm on Sand Hill Road. Stayed at the Rosewood, right across the street from some of those firms, and literally will walk across the street to those firms. And the number one thing that I really wanted to be able to understand was just how what was the flow and the process of how this particular organism, this entity, this particular system worked. You know, being in a locker room is one thing. It's nothing but guys that are in an NFL locker room. There are no other people that are really allowed in the locker room. Even a GM. It's very rare that the GM ever walks in the locker room. It's literally the players, and that's the only people that are allowed in the locker room. The coaches. It's very rare that you ever see a coach ever walking through NFL locker room. And it's one thing to know what's going on in that locker room, but how do I understand what's going on within a different organism and a different organization, a different entity? And especially considering, you know, this was one of the most prominent, and still kind of one of the most prominent venture firms, is what makes them tick? How are they successful? Why are they successful? What are the processes that they have in place to be successful? How do they think about hiring? How do they think about promoting from within? How do they think about building that culture? And how do they think about the decisions that need to be made? You know, understanding what an investment committee is, understanding what a partner meeting is, understanding the different facets of a pitch meeting, and how, you know, within a pitch meeting you have all these different people with different perspectives around the table with different expertise and what they provide to the conversation. So for me, being able to see that firsthand and be able to spend time with GPs and partners and analysts and principals and associates, that was impactful for me, especially early on in my development as an investor. And I think, you know, I can't say thank you enough for just that opportunity, because it's not many people in general that get a hands-on, um, under the hood, if you would say, look at some of these venture capital firms. They see them in the media, but they have no idea what's actually going on behind closed doors. And for me, it was a really special opportunity.
Yeah, especially one of the premier firms. I mean, a household name, and you had the opportunity to be there, seeing behind the curtain. But I'm curious. You know, you're a very successful professional athlete. You obviously do quite well for yourself and your family. But startups are a difficult road, and investing in them is different than, you know, putting capital into the public stock market and into private equity. Why startup investing specifically over alternative assets?
Yeah. You know, the thing is there was a point, and I would say it took a couple years. I would say it took 6 years before we got to the point, you know, as a family, confidence from a financial advisor, where he felt, all right, Kelvin, here's a small pool of the capital that you've acquired over the years that you can now go and allocate and go work on your passion. And you know, that's a conversation that happens a lot with athletes: is what is that next step? What is the next chapter of your life? And for me, this was a chapter that I felt I wanted to invest in, not only um, from a mental standpoint and energy standpoint, but also put capital to work. And that was a conversation that I had with my financial advisor. And we finally got to a point where um, he felt that I was ready to go and start doing that. But I would say one of the biggest things that I tell a lot of folks is, you know, they say, well, Kelvin, you're going to invest in startups. It's the most riskiest asset class out there. Well, my counter to that is, well, if I'm spending time with the experts in their particular category, who are the experts in that category, and spending significant time with the experts in that category that have the track record that speaks, then everybody loses. Everybody has a dud, and you know, everybody has those. There's nobody batting 1,000. But if they're, you know, batting 250, I mean, they're doing all right for themselves, you know. So it's one of those things where I'm mitigating risk by spending time with the best in class in their particular category. And I'm not going to say, hey, I know everything about every single industry, or um, I've made the best investments and my portfolio is the best. No, 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 no. I spend time with the best, with the experts, and not experts by what somebody quotes them in an article, or quotes them in TechCrunch, or quotes them in Forbes. No, it's what do the returns say? What do the numbers say? The quantitative value on what they've brought to their firm. What does those numbers say? And those are the people that I want to spend time with, and that's how I'm able to spend time in, you know, the startup, you know, ecosystem, being able to put money to work in this particular ecosystem, because I'm wanting to spend time with the best. And I'm not going to say that I'm investing in companies that are off a paper napkin. I'm not there yet. I'm not there where I could back a company that's fresh off the press. They just wrote it down. I'm not there yet, but I like to wait until the company has had some traction, been able to prove out some KPIs that they put in place for themselves, show being able to get from point A to point B to point C, and then let's see what that looks like and how I can get involved in the value that I can add to the company.
Kelvin, do you get involved before there's institutional backers, or are you looking for that validation after an investor, a professional investor, has done some diligence?
I've done both. I've been in companies, and I would say maybe 7 companies where I was never first money in. I'm never first money in, but there were times where I was early into a company before they got the validation of an institution. And those companies were truly when I had deep, deep conviction about the founder and the problem that they were going after. And then there have been other instances where I really enjoyed the founder. I really enjoyed the market that they were going after. I helped syndicate the round. I helped with fundraising, helped with introductions, helped with customers, helped with finding a lead. And then I put my money in after the institution had already done. I felt great about it, but it was great to also get validation from an institution. So I've done it both ways. And I'm not going to say one is right or one is wrong, but I've had the ability to do it both ways. I've done a couple companies that are pre-product and pre-revenue. They've done well for me. I've had companies that were late stage companies, that were Series C and Series D. And those same Series C companies were rated by the FBI. So I've had the mix of, having some really good ones that I've made great decisions on or great choices on, and then I've had some later ones that, just didn't pan out and just didn't do what I felt they were going to do. So, there's a balance that I think you have to have, especially as an individual who's deploying, either capital personally or capital from a family office perspective, that you're flexible. And I have some boundaries. There are some things that I love to see, I want to see. There are stages in which I want to get involved in the company, but at the same time, there are some use cases and exceptions that afford themselves, and it's either you can optimize and be able to capitalize on that opportunity, or you can let it pass you by.
Kelvin, there's a lot of data out there to suggest that professional athletes don't typically manage their money as well as other folks. What do you think the challenges are? I mean, when I met you, I was just blown away at the level of diligence that you did on our business, and you were as knowledgeable as any venture capital firm that I had met at that point in our time about our business. I'm curious, that felt different than the typical stereotype you hear about. Where do you think is that stereotype deserved, or is there something different that people just, are we seeing a change in that?
I think that the um, some of the thoughts and concerns with some of those stereotypes are warranted because there have been instances where guys have lost money. Guys have not been diligent about the people that they surround themselves with. But I would say the positive way in which to look at that is that guys are becoming more educated and realizing they have more leverage and realizing that they have access to um, influential people that can help mitigate some of those risks and be able to direct them in a much better path in how to utilize their money. So I think that both scenarios in which you've brought up are warranted. But I would say the latter is what I'm really excited to see because you see NBA, WNBA, women's soccer, men's soccer, lacrosse, uh, um, NFL. You see all of these folks and all these different athletes that are really taking hold of their career and being able to leverage it, and leverage it in business, leveraging it in politics, leveraging it in media and entertainment, and finding ways to buck some of the stereotypes that have been associated with athletes. And I would say specifically NFL athletes. There's been a change, I would say, and a change in mindset, honestly, that has really made athletes more aware of the pitfalls because you've seen it. Like you can't see some of these things that have happened over the last 20, 30 years and say, that can't be me. That's never going to be me. but not do anything to make sure that that's not you. So it's guys realizing that this is something that is real. There are sharks and there are bad actors that are out there, and your job is to be able to decipher which one of those sharks and which one of those bad actors are out there. So I think the ownership has been put more on the guys to actually do the diligence on the people they surround themselves with. I think guys realizing that you can be more patient, and every deal that comes across your table, you don't have to do. And then I think lastly, guys are realizing that if you do it collectively, and you start spending time with other peers and in your group, you realize that those same bad actors, the same sharks, have been around, and there were people that told them not to work with them, and now people like myself were telling these young guys, "Hey, there's this. You don't work with this person. You don't work with this person. Hey, be careful about how you're thinking about this, or consider this as you're thinking about some planning that you're thinking about." So I think there's a community and young people willing to listen to one another and listen to peers to be able to make better decisions around how they manage their money, who they're spending time with, who they're allowing to manage their money, and realizing that you need to be the person who manages your money as far as you knowing where the checks are being cut. You're not giving power of attorney over to a financial advisor or to a CPA or to an agent. And those conversations are being had more regularly within the locker room.
So, Kevin, I want to talk a little bit about what's going on in sort of broader technology. The folks that are getting venture capital have typically been on the coast. They've been typically white males. There's a movement of investors looking for more diversity, both in terms of gender diversity, diversity geographically, as well as diversity in color. And I'm curious, as you think about what you're seeing, are you seeing a movement of there? Or are more founders of color, more founders that are not in the coastal cities coming across your investment portfolio?
They are, just due to where I come from, where I came from. I came from Texas. I'm a country bumpkin at the end of the day, man. So I resonate with people very much like yourself. I mean, you're not in the coast, you're not in New York or San Francisco. I understand what it's like to live in the South. I've been in the South. I got friends that are in the South. Classmates that are in the South. So yes, get deal flow from Texas. Get deal flow from Jacksonville, Florida, because that's where I played at. Get deal flow from Pittsburgh, Pennsylvania, where I played at Western PA. New York is what it is. But I think, just due to some of the circumstances and teams that I've been a part of, I've been exposed to so many different cultures. And also just, being a black man, I've been afforded the opportunity to see deals that come across my table from other people who look like me. So for me, it hasn't been hard to see uh, the deal flow that comes from people of color. But the question is how do you make sure that that's seen up and down the stack? Like, how do you make sure that allocators are people of color? How do you make sure that fund managers are people of color? And that's something that is starting to be something that's talked about within smaller silos, but I think it's starting to be, start to be brought to the forefront. You think about what's going on with the New York Stock Exchange and how the New York Stock Exchange is making sure that boards have a woman or a person, or I think they're working to have a person of color that's also a part of that board as they go public. And for me, what I'm excited about is to see companies that are outside of the coast in general be able to get funding, and it's not just concentrated in San Francisco and New York, but now you're seeing bubbles pop up in the Midwest and Indianapolis. You're seeing things pop up in Atlanta. You're seeing things that pop up in Chattanooga, in Nashville, in Durham, North Carolina. You're seeing stuff in Austin. I mean, even though Austin is now, I would say the kind of the new California of the South in a sense, but you're seeing all these different little small hubs starting to pop up that are outside of kind of the traditional coast that are building phenomenal companies. And what I love about it is most of these companies are staying, I won't say that they're staying stealth, but they're staying low key where they're literally just building. And then, people seeing with a $500 million or $1 billion valuation, it was like, how does this company do this? And it wasn't in the valley. They were able to have great NPSs with their staff and with their associates and with the employees because they loved working for them. they got more bang for their buck. The margins were better because you had the cost of living that wasn't astronomical. So I think that there's a move to want to be able to back founders in different geographical locations. I think the remote working is something that I don't know if it's here to stay, but I think it's something that is being used and can be used at scale if it's done the right way, if a founder is willing to build culture the right way. But I also think that people are realizing that there are some amazing founders of color that are doing really well. You think about the founder in Atlanta that started the company Calendly, that's doing extremely well right now. That everybody is using in some shape, form, or fashion. Was started by a black man down in Atlanta, and there's some amazing companies that are doing some amazing things. You got people in healthcare that are doing some amazing things. You have Morgan DeBoe, who's built a huge tech conglomerate around kind of black media, a company called Blavity. So you've seen companies that are continuing to thrive in this environment, even though they're not in the coast. I think about a founder, DeVaris Brown, that started a company called Moroxa around cloud-based services, which I think is a fascinating industry because you really don't see a lot of black people in some of these high-tech arenas, the enterprise B2B services or business intelligence or cybersecurity or IT or transportation. You just don't see a lot of black folks in this particular arena. I think about a woman named Sarah Meeker, who just raised a monster round with a company called Grow Intelligence. And for me, this was fascinating because I got cattle back at home, so she's around crop insights, understanding the commodities and things of that nature. So it's diversity that's starting to bubble up. We need to celebrate it, and where there are times to support, allow that opportunity to happen. And I would say, give a huge shout out to you, allowing me to be a part of FreightWaves because I don't know how many black folks you got a part of the cap table, but it was an honor to be a person of color on the cap table because that's a role in which the entire ecosystem has to play as well.
Yeah, I mean, we're honored to have you, Kelvin, and I've learned a lot. We have a African American board member. We have some folks of color, but certainly not enough. We would love to have more diversity. It is challenging being in an industry which is, as you mentioned, it's an industry that's most of the management's white males, and it's challenging as a white male CEO to figure out how to be effective to reach people of color and be more effective at being inclusive, because that's important as we think about how we do a better job. What advice would you give for me to attract more folks of color in our ranks and really become an organization that invites diversity?
I think first and foremost, I think it's finding ways to partner with some of the folks that are already out there. I think about a company like Cloud Trucks. I don't know if you've ever heard of them, out in the valley. Ran by people of color. I think it's finding ways to just have conversations and let them know that there are allies within the industry. I think about a founder by the name of Brittany Annex, who was formerly at Flexport and is getting ready to start on her next gig. It's being able to have conversations and letting her know, hey, that I'm an ally. And I think that goes a lot further than many people think. It's just being able to know that you have allies from different walks of life and different ethnicities that are just there to support, whether you're frenemies or whether or whether y'all are working together in a partnership. I think the ability to know that there are people from all walks of life that are here to support, especially within the ecosystem. You understand it as a founder. You understand that this journey is not easy by any means, and to be able to have somebody call you and reach out to you and just say, and I'm here to support you if there's ways in which I can be helpful with what we're doing here. That goes a long ways.
I'm glad you mentioned Grow Intelligence. Actually, I've had the chance to meet Sarah over phone, not in person. But when we were originally sort of building our data product, Sonar, we actually looked to her, what she did with Grow, we were inspired by what she was doing around agriculture.
It's impressive, man. I mean, I can't say enough to be able to have that type of data, that rich data that stretches across the world. And when I met her, they were in a small WeWork there in New York. Can't imagine what the office is now and how big the staff is, but To be able to go into the commodities industry, to be able to provide a resource for the agriculture industry, that is absolutely essential. Because I would say that agriculture is another industry that is somewhat archaic. The people that are in it are much older. I was actually talking to a farmer yesterday. He's down here outside of Yuma in El Centro, California, in Imperial Valley. That's building a farm. He's a young dude. He's 37. I'm like, man, let's get together, man. Let's talk, because it's the farming age is pretty high. So to be able to find other young people in that particular industry for me is always fascinating. But back to Sarah, she's young, she's vibrant, she's diverse, and you just don't see that. And to be able to know that it's not that she's diverse, that she's attracting attention. Her product is legit, and the company is ripping.
It's legit, Kelvin, and I tell you, their infographics and their brand design is, I still look at that in awe of how well they describe what's happening in the market. So I think it's an amazing, what she's built there is an amazing enterprise.
I'm looking forward to it. I'm looking forward to the journey and what
Are you
comes
an investor?
But I'm really excited about it.
Are you an investor
wish.
in Grove?
I wish. Not yet. I've been staying in touch on a regular basis to make sure that if I get an opportunity to put a check into the company, I do. But that is one that I'm really excited about, and I've been following for some time.
All right, if you get the book and they're raising, you let me know, because I'm in as well. So, Kelvin,
we'll do. I got you. We'll make it happen.
Kelvin, appreciate your time today. Really, always great catching up. Best of luck in the off season, and I'm sure we'll be in touch.
Sounds like a plan. Thanks so much for having me.
All right, appreciate it, Kelvin. Thank you for tuning in to the Global Supply Chain Conference here. Got a lot more coming at you, talking about the intersection of supply chains, freight, and the global economy.